IPO equity financing allows qualified investors to deploy capital into unique private equity opportunities. Swiss Financiers has access to a quality pipeline of off-market projects from our network of forward thinkers and pioneers. We target businesses where our team has identified the most merit and potential for sustained growth. The industries can vary, but the investment philosophy remains the same: bringing trust, value, excellence, and expertise into everything we do. At Swiss Financiers, we are a highly experienced team that are able to assist and be accretive to all of our partners and clients. We make IPO equity financing simple and comprehensive, eliminating the noise to focus on the essential. Private equity is an alternative investment class and consists of capital that is not listed on a public exchange. Private equity is composed of funds and investors that directly invest in private companies or that engage in buyouts of public companies, resulting in the delisting of public equity. Institutional and retail investors provide the capital for private equity, and the capital can be used to fund new technology, make acquisitions, expand working capital, and to bolster and solidify a balance sheet. A private equity fund has limited partners, LP, who typically own 99% of shares in a fund and have limited liability, and general partners, GP, who own 1% of shares and have full liability. The latter are also responsible for executing and operating the investment. Key takeaways: private equity is an alternative form of private financing away from public markets, in which funds and investors directly invest in companies or engage in buyouts of such companies. Private equity firms make money by charging management and performance fees from investors in a fund. Among the advantages of private equity are easy access to alternate forms of capital for entrepreneurs and company founders, and less stress of quarterly performance. Those advantages are offset by the fact that private equity valuations are not set by market forces. Private equity can take on various forms, from complex leveraged buyouts to venture capital. Understanding private equity. Private equity investment comes primarily from accredited and institutional investors, who can dedicate substantial sums of money for extended time periods. Start speech, end speech in most cases. Considerably long holding periods are often required for private equity investments in order to ensure a turnaround for distressed companies or to enable liquidity events such as an initial public offering, IPO, or a sale to a public company.